Welcome back to the channel. I hope you're having an amazing day wherever you are around this beautiful planet of ours. Today, Bitcoin heading towards that danger zone this weekend as the S&P has broken down from the support level of 3,880 points like we looked at in yesterday's video, coming close to retesting the almost inevitable lower levels here at 3,700. Let's take a look at that in today's video, along with Ethereum confirming a weakness after the merge, something that we've covered here for many months now. So if you haven't already, make sure you are subscribed to the channel so you don't miss out on the predictions, the monthly predictions on Bitcoin and cryptocurrencies. This one was just 2 weeks ago. And then of course, in early August, the 6th of August, we talked specifically about the signals to look out for when it came to the month ahead. Lots of details in those videos. Make sure you like, subscribe, all that good stuff down below, so you don't miss out on the content before the market tells us what it wants to do. All right, so the first thing I want to look at today is the fear and greed index. You can see we're floating around extreme fear at the moment. The thing that I like about this is that we are still floating at this extreme fear. The market is not heading to new lows for this period of the cycle. It is heading to lows, but it hasn't broken down from the June low just yet. So the current thesis is, even if we do find a low that is lower than the June low, because this is basically the bear market cycle low so far for S&P, NASDAQ, Bitcoin, many other cryptocurrencies, even if we do find a lower low, I would say that this is probably the final leg. We are in that bear market accumulation zone. The fear is still there, but it is really wearing on a lot of people. The thing I've noticed a lot with social media right now is that people are now going from recession, using the word recession in their titles, in their language, on Twitter, all that sort of stuff. Now they're trying to up the ante to depression. Take a look for yourself. There is a big move to go from recession to depression, trying to really push home that the market is about to collapse. This is always the news near the bottoms. So we're not concerned if we need to pick the exact low, but I'm pretty certain we are bouncing around those lows. So S&P, obviously it's the market of the world at this point, it has the most amount of money in it. Even if we drop to the halfway point, the macro support, 3,500 points, it's only 10% from where it currently is. No big deal in my books. That is that whole buy the bottom region. I'm very excited that we will be coming out of this later in 2022, if not 2023, and then we're on to the next stage of the bull market. The majority of people will unfortunately miss the bottom again because this is the way the cycles work. It happens every single time. The same deal with the tops. You guys have been here before. Hopefully you saw the top. Everyone was banging on about $100,000 Bitcoin. The market was screaming away. Tech was going to take over, and it was basically all the money coming into that space. So if we pay attention to those signals when looking at the news headlines, and more importantly, the market sentiment, what is the feeling out there, and then relay that onto a chart and just see what is actually going on with the supply and the demand, what are the investors, what are the traders doing, then we can really start to get a bigger picture of what's going on out there. This is a nice base to build upon for the rest of today's analysis. The week has wrapped up in America. What's happening for Bitcoin as we head towards that danger zone and the Ethereum flipping in the trends. The Fed meets next week around, again, seasonal date for any of the GAN lovers out there, September 23rd. These dates were known well in advance, years and years and years in advance. You can project them out years to come as well. So it's interesting to see how this meeting is coming together with the other dates that we're all looking for. Potentially, we get a low in the market there. We'll continue to watch and see where that comes out. But essentially, economists are expecting 75 basis point hike. Maybe it goes to 100. Either way, the market is still trading around the same prices as it has been since May. It's about 4 months so far, with a lot of emotions in between that with the bounces, exactly what we've been looking at months in advance, looking at the predictions for September and August based on historical data. So that's what we're expecting next week. How does that look now for Bitcoin as we head towards that danger zone? Overnight, we got a slightly lower low here to 19,300, but the market did happen to close back above the resistance level of 19,500. So that's some good news, at least in the short term. Maybe we continue to head towards the danger zone of 20,700 to 21,000. So we've had to readjust the 50%, bring it down to $21,000. So for me, the danger sign here is if we continue to creep up on lowering volume. It's volume down here, and then we get a rejection around this particular level. That would be a danger sign that we're going to head back down to break current support and then potentially into these previous lows of 18.6 and then that June low of $17,500 as well. We're really not seeing that bounce away that we want to see, but again, it is the weekend, so let's see what happens from Monday into Wednesday, which is the meeting for the Fed, and whether we do continue to hold support at 19.5 or we break down and then come back to test 18.6. At which point, I dare say we'll come close, if not break that 17.5, but it's within the bear market bottoms. Taking a step back to the monthly chart, we have broken out of the bear market downtrend. That's for September, but we're now currently sitting back on the downtrend line. So the bleed is slowing. These are all leading to those indicators of the bulls flipping the bears. But of course, there's no problem with the market just crossing beneath it and coming back above. This is a monthly chart, so it would happen over the course of a month. If this is September and we drop under, we'd have to wait till the end of the month to see if we get a close back above the bear market downtrend. We obviously still have the log chart to overcome as well. So this is top to top. It's only got 2 points at this stage. We do want to see at least a third point, if not a break above that, to just slow the bleed of the bear market. So far, things are looking pretty good within this zone. And if it's not end of September, maybe we see it in Q4. But again, I'm repeating myself, I like the look of the lows coming in. As for Ethereum and the breakdown, the merge hype absolutely dying off. The price for ETH currently is at 1,426. It is dropping at the moment. It did break down from 1455 on the daily chart to get a close beneath the 50% level and is really trying to hold the last level of support here at 1420. You could probably throw in 1360 as well, but it's not as strong, I think, as these other couple of levels. So if we do see the breakdown, of course, here is the danger, 1300. And then within this zone, this is going to be a much more difficult place for ETH to recover from. If it does drop into the $1,000 to $1,250 range, that's going to be a much harder place for ETH to recover to then push back to the next higher prices. If it stays around in $1,000 to $1,250 too long, of course, we basically up the ante and drop back down into those 3-digit ETHs. Long term, I still see ETH as going up, going past 2, 3, 4K. But in the short term, we need to see some strength come in above these levels right here at 1,270, call it 1,300. The strength has to hold and then break back above 1,455 rather quickly. The trend for ETH versus BTC has changed. It has flipped from up to uncertain. So the uncertainty here is that we now have lower lows, but also higher highs. Now, all that has to happen here for it to go to a downtrend is for the market to come back up from wherever the low comes in, back up, and then form a lower high, and then for the market to drop back down. That would bring it back into a downtrend for ETH versus BTC, which could then lead to the next lower prices of 6.7%, right here on the 50% level, and then we're looking for more support back at 5.9%. This is ETH, BTC, remember. The major 50% is still at 5.2, and the previous low is 4.9. So there's a lot of levels there between 4.9 and 6.7. Let's see how ETH does as it continues to fall at this stage, as the trend is now uncertain, market is now down short term, and whether we get some significant support at 6.7% and starts to base out at that point. Now, reading the charts like this are all really good ways to be able to save you money, make you money, and not get sucked up into the old FOMO of mergers and other big news headlines. The same deal happens for ADA, for Bitcoin. We've got the halving coming up in a year and a half's time. But all of these things are the same when you just overlay them on any other market. And right now, this is trending down. We had the resistance confirmed now that swing bottom was broken. The macro resistance stays in play once again, as we've been watching for months now. And the market now has to decide where the demand, where are those buyers going to step back in strong numbers, not just little bounces up, but really are going to turn the market back to bullish and hold some of those macro resistance levels. So although it is the weekend, we have seen in the past that Bitcoin can start to trend up. The volume is probably going to be low over the weekend, but come Monday when the US markets open, if we start to see the market get rejected at around that $20,700 to $21,000, then we could probably expect lower prices and the breaking of 19.5, which means the danger zone stays in play. Watch that. Watch where the market then comes back to and whether those levels get taken out, because we have tested those lows quite a few times already and the 18.6 thousand is in danger. Obviously the benefit is lower prices. For me, my timing cycles are working out. We looked at the 4-year cycle back in February of this year. So anything under that 19.5, call it $20,000, for me is a fantastic opportunity to be buying the dip now, rather than what everyone was doing earlier in the year, buying the dips on all of the downtrends here, like we could see in the cryptocurrency markets. We're still not out of complete danger yet, but at least the reward to risk is far more in our favor right now than it was back in October, November, December, and January. Call it any time previous to that. There's a link in the top of the video description for our free newsletter. Go and sign up to that if you haven't already. I'll see you guys at the next video. Like, subscribe, bell notification icon. Have a fantastic weekend. Catch you once again. Until then, peace out.